Thank you for joining me in the second video where we look at the value in use calc. So remember, the cash flows from the use of the asset will be taken into consideration, and cash flows from the use to be included will be our inflows. So the money that we make out of this asset by using this asset, and then cost saving or other benefits due to restructuring, but only if the entity is committed to the restructuring. So we will have to tell you this in a question. Cash outflows will include the cash outflows necessary for the continuing use of the asset. So for example, we are using water and electricity to be able to use the asset, then that will be an indirect cost, but it is directly associated with the asset and necessary for the asset to be used. Or to bring an asset that is not yet available for use into a usable condition. Cash flows due to improvements or enhancing the asset's performance will only be included if they were actually incurred or that it forms part of a restructuring and the entity is committed to the restructuring. If we look at cash flows that will be excluded, that will be cash inflows that relate to other assets, since these will be taken into account when assessing the value in use of these other assets. Or cash outflows that have already been recognized as liabilities. For example, the payment of accounts payable. These outflows will have already been recognized either as part of the asset, but in this case as an expense. Then cash in and outflows relating to future expenditure to enhance or improve the asset's performance. And then cash in and outflows relating to a future restructuring, irrespective if the entity is committed or not. Cash in and outflows from financing activities, so we will never take into consideration any financing activities, as the cash flows will be discounted using a discount rate that will take into account time value of money. And then all tax amounts will be excluded, as the discount rate that we use is always a pre-tax discount rate. Then if we look at cash flows from the disposal of the asset, so that will also be included in my value in use. It will be the net cash flows from the future disposal. It will be the amount that I expect to receive at the end, less the estimated cost of the disposal. So most of the time we will give you these amounts. The prices can be adjusted up or down by general inflation or specific future price adjustments. And then we will take our cash in and outflows that we are going to use. We will put it in my financial calculator. I will always use my pre-tax discount rate, and I will calculate my net present value. In the next video, we will look at an example.